when I saw the opportunity to finally trade my value for money for what I thought I was worth, I jumped in. Communication with your investors, transparency, regardless, good, bad, or ugly. Tell it proud, tell it loud. No, the real jobs start when you buy the fund. Everybody gets excited when they get a deal in the contract and popping the champagne because they close. But the real business is asset management. I truly believe that the only way you could run a business is with the system, right? Then we just identified we had the wrong butts in the wrong seat. So we had to right size and rebuild and continue to do that over the years. The raise the money part will come. You have the deals and you know how to execute the business plan, right? From the systems and stuff you set up. Once people see that, they'll gravitate to that because they know it's real, right?
Fuquan Bilal joins me here. You can learn what his team is up to and head over to NNGCapitalFund.com, NNGCapitalFund.com.
Now, I appreciate you.
So let's start things off. How did you find your way into real estate investing and what you're doing today?
As I jumped out the window and grew wings falling down
That's like what most people do, right?
while flying.
Yeah.
For me, it was I shadowed a family member of mine because they had some success early on where I was working a corporate job. They made a bunch of money and I got excited. I was young, 24 years old at the time. I started in 99. So for me, it was all about the money. I come from a poor background setting, single parent household. And when I saw the opportunity to finally trade my value for money for what I thought I was worth, I jumped in and I became passionate about it. It became like, it was very desirable, right? You're a 24-year-old kid. My first deal, I made $40,000. And at the time I had a good salary. I was making good money. I was in sales, 80,000 base. So I made half my salary and it was a no-brainer. I put my 2-week notice in right away and jumped out the window, grew wings falling down because 6 months later, I blew the money. I blew the bag. So not having any financial literacy and knowing how to make that money work, it was just a bunch of money that, I blew immediately on materialistic things, but that made me more hungrier and wanted to learn more. And I wouldn't change anything about the beginning of my journey because all of those things made me who I am today.
So at that point, when you blew through it all, what made you keep going for the sheer fact that you saw that it was actually possible at that point?
I have a choice. No,
Burn the bridge, huh?
I burned the bridge, no looking back. Because I had already established connections and it was just a waiting game because, real estate, it's a 30, 45 day by the time you're going to contract to close. So I had other deals lined up and just had to wait to close. And I wanted to keep going because I saw at that time in my life, freedom to me was, and still today, doing what I want to do when I want to do it. It gave me ability to do that. It gave me the capital I needed to live a better life, to feel more fulfilled. It was just, I wanted more of that, what I experienced the first time I had my closing.
Can you talk about your mission and especially within the alternative asset space?
Yeah, so our mission is to provide quality, affordable housing for low income families. And we do that by investing in the Southeast, primarily in Middle Georgia, where we buy B class or C plus class properties, anywhere from 80s, 1976 on up type of properties. And these could be anywhere from 40 units to 100 units. And typically rents in those areas would be $650 for a 1-bedroom up to maybe $850 for a 2-bedroom. Still affordable, still in alignment with HUD pricing, Section 8. So that's the market and the space we play in. I come from that area and that's what gives me my feel of importance is to be able to go back to the community and provide those affordable housing solutions, quality affordable housing, right? And then in the Northeast, where I'm at in New Jersey, where I've been investing for the last 26 years, we do luxury spec homes. So we'll take a house in a high-end area. Sometimes we'll tear it down, rebuild it from the ground up and sell it, or we'll add an addition. That's the fun stuff, right? The creative stuff, you get to do the designing and everything else. And those homes sell anywhere from 1.5 million to 2.5 million. So we're seeing the deceleration in the market, but not really price drop. If you price wrong, of course, you're going to reduce it.
Mm. It kind of reminds me, I have some friends in my market who started a service or a nonprofit where they provide vehicles to families that are in need. And they have their main garage, which is a commercial property. They do the regular mechanic work to fund the other piece of it. So it's kind of a symbiotic relationship. Is that kind of what you got going on?
Well, and that's not with vehicles. We just provide how,
No, with housing.
of course, yeah. So that's interesting, though. That you said that. I'm thinking of that concept. It's pretty interesting. I never heard of that.
Yeah, it's called Fix It Forward.
I like that.
Yeah. So they have the mechanic shop that funds the nonprofit. It's kind of a good setup.
Yeah, we deal directly with HUD or the local municipality Section 8 programs. They have one program where they provide housing vouchers for those type of residents. And we work hand in hand with them. The government always pay, right? We work hand in hand by providing quality affordable housing for that type of tenant base.
So, what are some of the key principles you use to analyze the properties you acquire and invest in?
Yeah, we want to see job growth. We want to see if there's any major players there like Amazon or where we are, Middle Georgia, Coca-Cola is investing 56 million. So we want to see things either coming to town, things that's been approved by the town that may be coming in the near future, or things that are already there. So of course, you know, that's important. Medium income is important. Basically, the type of properties that are in those areas are important because we want to know who's our competition. So those are some of the things that we look at. And then it's just really property due diligence that you just check all the mechanicals, roofing, and all the standard things to see how much work you have to put into this to turn it to be better. We don't want to go into a property and invest, $10,000 per apartment turning, try to stay somewhere between 6 and 7,000 for what we charge. We don't want to over improve the unit. So those are some of the things that we look at when we do due diligence, how much we need to get the curb appeal to get this unit to be under our quality affordable housing. What would it cost? If it passes all of those checks in underwriting, then we move forward with it.
Sure. So,
Multifamily.
do you leverage any creative financing in your deals?
Sometimes we do. Yeah, we have some mom and pops who really don't want to get the really big tax hit from selling a property. If they own it free and clear, if it passed from their parents and now they're exiting it because of lifestyle, they owned the property for 15, 20 years, they're tired and they want to just relax. We create a situation for them where they become the bank. It's almost like a strategic partnership. Sometimes we do that. And that helps us, especially if the property is not stabilized, meaning 90% or more occupancy is what is required for us to get permanent financing. So if it's less than 90%, then you have to get bridge debt, which is very expensive in this market. That is when we look at the opportunity of trying to get the owner to become the bank.
Okay. So, you having raised over $50 million in capital so far, what's the biggest lessons learned in that fundraising process?
Communication with your investors, transparency, regardless, good, bad, or ugly. Tell it proud, tell it loud. That's the biggest challenge that most sponsors have. They only want to share the good. They don't want to share the bad. Really invest in your own deals. You raise more capital by doing that, by showing that you're aligned with this also by having some of your own capital in the deal as well. Investors like that. So if you communicate transparency, invest some of your own money, tell when things are going wrong and how you're going to fix it and keep them abreast, and that goes a long way.
Do you think it's a mistake for some investors to believe that simply because they got the property under contract and that they've done the legwork, that is enough?
No, the real jobs start when you buy the fund. Everybody gets excited when they get a deal in the contract and popping the champagne because they close. But the real business is asset management.
What do you mean by that?
Yeah, tenant management, making sure that you can lease up, you can turn the units fast, you can control expenses, You could implement things to drive the bottom line, like RUBS, the Racial Utility Billing System, where you can, common areas, the utilities, water and sewer, you can actually bill that back to the residents on like a pro rata share and offset that cost. So those are some of the things you can do to increase the bottom line. Operational efficiency, little things like seeing if they have, what are we doing now for trash service? So you have 100 doors, you can provide a service to the tenant and say, hey, we'll come pick up your trash from your door. You don't have to take it to the dumpster. I'm going to charge an extra $15 a month just for that valet trash service. So those little things that you can add on there to kind of increase the revenue, to really get a higher return on your dollar.
Do you do your property management in-house?
Yes, we do. We do. I would highly advise that. It's good if you're like less than 2,500 doors to do that. We leverage your virtual team. We have most of our boots on ground at all our properties. We have managers, and really just education, training them, incentivizing them is what's important. When I first started doing multifamily, because I did a lot of rentals here in New Jersey where I'm at, after COVID, we divested the portfolio and started to buy more in the Southeast. So at that time, it was find a property manager, outsource it to a property manager, make them your strategic partner. But what I found from my experience, and there's some good property managers out there, but the ones that I had ran across and had relationships with was just checking the box, wasn't watching cash flow, the right timing to pay the bills. They just want to pay everything before we collect all the rents. They do accrual accounting. So there's a lot of different things that you figure out and say, this is really not working. They're making all the money and I'm constantly feeding them. So when we took over, we automatically noticed that self-management is more profitable.
So, that's really interesting that you bring that up, especially the 2,500 unit mark. It's kind of rare to find a property manager where your interests are aligned. Like you said, more times than not, it seems like you're just kind of funding their operations.
Correct. Did you experience that?
Oh, yeah. In fact, I'd be curious. You mentioned you said you're in New Jersey and then you're doing these projects in Georgia.
Yes.
How are you finding doing this at a distance like this?
Well, I mean, for me, is I go to a lot of events. I'm a part of a lot of masterminds. So I have a lot of connections. People refer people. Sometimes these vendors work with other people that I know. So I will get a referral and pretty much work from there. And then a lot of boots on the ground stuff, right? So when I first went to the Southeast, I connected with a lot of brokers, and brokers give you information as well. There's some property managers that I reached out to because they manage these properties for owners. And that's a lead generation for you because they know owners who are struggling who want to sell. So sometimes you'll find an opportunity there and you just create those relationships and, you give them a chance. We vetted this company out. We spoke to people who they deal with their experience with them, good, bad, and ugly. And we decided to move forward because we got enough information that we felt good about until we started to work with them. Everybody works different, right? So we use the EOS model, Entrepreneurial Operating System, Gino Wickman. So we run level 10s, weekly pulse meetings, and basically when we started to do the weekly meetings, it started to drill down, it started to create KPIs. They just wasn't giving us what we needed in order for us to get a really good grasp on the property. And it was just taking too long to get information. And then we started to receive invoices with their letterheads instead of straight from the vendor. So, you start seeing all this stuff and you're like, this doesn't seem kosher. We need to transition out of that. And then once we did that, we felt it was more profitable. We started to see the numbers immediately within 90 days and decided to keep going down this path. It's not easy. It's a lot of work. So really consistently training the team members, the boots on the ground, educating them, empowering them is where we see the most value.
Well, before we dive into my next round of questions, because now I have a lot of questions regarding your implementation of EOS and a few other things, I want to remind everybody to head over to NNGCapitalFund.com and learn more about what his team is up to there. And if you found some value in what we're talking about so far, do us a quick favor, share this with one of your investor friends. It is the only way this show will continue to grow. And if you're watching us on YouTube, give us a like and subscribe. When you implemented, the reason I'm asking about this now is because you are one of a series of people that have brought up EOS and traction and going through this implementation. Was there something that occurred, or you realized there was a stunt in your scaling that forced you to like take a step back and consider some sort of this implementation?
I've truly believed that the only way you can run a business is with the system, right? So whether it's standard operating procedures, there's so many, right? So you have scaling up is another one, which is Rockefeller Habits 2.0, which is really good. That's like the next level from EOS, right? EOS really, for me, gave me the opportunity to learn how to systematize and structure my business, my departments, how to map things out on an annual, quarterly, weekly basis, right? It's a 13-week march every quarter, and how to keep my team accountable, right? So it's a game changer. Once we started to figure out our purpose, our why, why are we doing this, our BHAG, and basically put that into a strategic plan, right? 1 year strategic plan, and then break those things, the rocks, down by quarter, right? So there's a saying in a book that says when you fill a jar, you put the rocks, the pebbles, and the sand last, right?
Yeah.
So building the rocks every quarter on what we want to achieve to hit our annual goal, it's reverse engineering it and then getting the team aligned with it. Okay, now what are we going to do over these next 13 weeks? It has helped us get a lot of traction and helped us to create operational efficiency and cut out the busy work and implement more productivity. And it creates, it's just a game changer. Your team members following that process get to show who they really are, if they're planners, if they're just busy people, or they're productive people. Because if you have a goal or rock that you're focusing on for the quarter, everybody in that department and that team has a responsibility to make it happen. And there's something else that I learned a year ago, which was Scaling Up is another book that anybody listening to this should read. I actually have a coach that taught me how to do a management accountability plan. It's a MAP. And you take the 13 weeks and you put what you're going to get done, who's going to do it, by when, what resources they need. And you put that whole map together and you go over it with your team and everybody is execute. And every week you're coming on a call and it's like green, yellow, red, right? So if you see red constantly, then it's something that we talk about. We IDS it. We still use the EOS model. We IDS it. And then we identify, discuss, and solve it, create a solution, a task around that. We come to the next meeting. We just keep beating the drum. That helps you get traction.
Mm-hmm. So how long have you been trying to run this, and what type of improvement have you seen, especially regarding your productivity and scaling your team?
So we implemented EOS right after COVID, and the team would not buy into it because they were used to their old ways. Nobody wanted to change. Nobody wanted to try anything new. We're good enough doing what we're doing. So it was a lot of pushback. And then we just identified we had the wrong butts in the wrong seat. So we had to right size and rebuild and continue to do that over the years. And we really understood that core values are the most important thing, right? So people will buy into it and they have to live it, breathe it. Like everything they do is based around the core values. And we started to realign ourselves around that to make sure that we hired people that was in alignment with our core values. Then we started to see people was taking an interest into it and starting to implement it. So there's 4 parts of a business. This is something I learned in Scaling Up: people, strategy, execution, and cash. The people part is the most important thing, right? I believe that only people can be successful, not a business. Successful people make the business thrive, right? So if you work on your people part, by investing into your people, not just bonuses and incentives. What books are we reading this quarter? What are we doing to grow ourselves, right? Because I believe that people only grow to the extent that they do, right? So if you grow, then your business grow, right? So that's kind of what I meant by that. But when we started working on the people part more and focus on the people part, like, what are your personal goals? Let me help you achieve that. People see you here, not just about the business, but what they want to personally achieve. Then there's a reciprocity that happens. So that's the people part. And then it's the cash strategy and execution. And then the rocks are broken down, right, on those four parts. What is the rock this quarter for the people? Oh, we're reading a book, or we're doing a training program, we're doing this, right? Self-development, right? That's the people rock. You always got to have a people rock every quarter. The execution rock, strategy rock, cash rock. So your business is focusing on those things every quarter. Now, the Pareto principle, right? You don't have to be 100%. If you do 80%, you're making traction every single month. You're making some traction. And it took a while, but once we started to get there, we started to see our business shift, right? And become more operational efficient. Everybody understands the KPIs. They know their numbers. They know what they mean. They know why they're accountable for it. There's one level that I have not reached yet. It's a really great book called The Great Game of Business. Have you read that before?
Nope, I haven't read that one.
Yeah, it's a really good one. It's called The Great Game of Business. Can't think of the author right now. What it talked about was the open book policy. Show your employees your P&L and balance sheet, because everyone is always thinking the business owner is making all this money. I should be getting a raise every 90 days, right? So what the book talks about is put the money in the bank, right? You say, okay, guys, here's the money in the bank. But in order for you to get your bonus, the money in the bank, the company have to achieve this. And then we will split profits with you. Those are the bonuses. We're splitting profits. The company have to make a certain percentage return. Anything we hit that return, we split profits with you. Now it's broken down into different departments. We have to control expenses over here. We have to do over here. People name departments go on the P&L and balance sheet, who's responsible for what. And every week they meet and they look at the numbers and they can see, right? So now everybody's pushing and driving to get the company to hit that goal so they can profit share bonus the company. But it's open book. And some people may not be willing to do that because employees see and they go, oh, you're making all this money, right? So that book is like, that's like the next level. Great Game of Business. It's pretty interesting, that concept, because it makes people feel like a partnership, an owner, where they will work a Saturday, they will work an extra hour or two instead of running out at 4:50, right? So that's like the ultimate level.
Well, you got to take some credit here. I mean, when it comes to this type of thing, you said it took a couple years to get everybody to buy in, and a lot of entrepreneurs would have kind of bailed if they didn't see some immediate results, but you kind of stuck with it and tried to figure it out.
Well, I saw people successful with it, right? I'm in a mastermind called the Collective Genius. It's some of the top real estate guys in the US. They're killers, right? Guys doing tons of deals, big business. And when they speak to how this have transitioned their business and took them from a $3 million business to a $10 million business in a short period of time, I'm going to try it. I'm gonna try it. I'm buying it. So yeah, but you just have to stick with it and you got to believe in it. And that's with anything.
So, well, a lot of people are listening to this and they're thinking, man, this sounds great. I'd love to be able to scale my real estate investing business, but they need to start. They need to get their feet wet and become that real estate investor. What are the 3 actionable strategies or tips you would recommend to new real estate investors?
Definitely start with EOS by Gino Wickman, because you want to start with standard operating procedures from the very beginning. If you try to build the plane while flying in the sky, you will be frustrated. Ask me how I know. All right. So get systems, structures, KPIs, process driven things in place, right? Mind map or process. They have the lucid charts. You can put everything there even before you make your first hire, you can do a mind up. If you're the person that knows how to do the flip, how to do it, build all your processes, do all that, systematize everything before you start to hire and recruit people. So you have that foundation laid first. And again, there's this constant education, get into a mastermind, get around some people who are smarter than you that can help elevate you to the next level. Essentially, what you pay for is speed, right? That's what you're paying for. You're getting in a room with people who's at a different level than you that you can learn from that will give you your time because you're in that community. So I would definitely say do that. And the last thing I would say is learn how to become a good acquisitions person, right? You got to always be finding deals. The raise the money part will come, but you have the deals and you know how to execute the business plan, right? From the systems and stuff you set up. Once people see that, they'll gravitate to that because they know it's real, right? So those are the three things that I would share with someone who's looking to get started, or maybe somebody who's already started on their journey and don't have systems in place. That's like, oh man, I wish I have a system. One of the things that I look at is the recruiting part, right? I remember 7 years ago, I would hire somebody, 90 days go by, didn't want to work, it didn't work out, got rid of them, hire somebody, and I had to keep doing training, training, training. Today, everything's systemized. I have a video recording of everything. They just watch videos, they take tests, they do a bunch of stuff. So we make sure they understand it and then they execute. And I don't have to be there speaking physically, burning myself out. So building that system and process has helped me a great deal. So I would definitely say start there.
Well, this has been such a great conversation. I just want to remind everybody one more time, head over to nngcapitalfund.com to learn more.
No, I think we covered a lot. We covered business from an operations standpoint. We talked about the two verticals that we invest in. The only thing we didn't talk about, one thing is how we help investors. So we allow accredited investors to partner with us on these opportunities that we have in the Southeast and in New Jersey. So if you are interested, you can schedule a discovery call at nngcapitalfund.com. I'd love to learn more about your investing journey and share a little bit more about our story.
Yeah, that's nngcapitalfund.com. That's going to be a clickable link in the show notes. But if you're ready, we'll dive into the rapid fire and close out this episode.
Let's do it.
What lie do real estate investors often tell themselves?
What lie?
If you could go back in time and give your younger self a piece of advice, what would it be?
Do the same thing that you did already.
Do you have a book recommendation?
So it's Maxwell Maltz is the author, and it's Winning Self-Image is the subtitle, and the main book is called Psycho-Cybernetics.
Okay,
And
that's
it's
a new one.
how to develop a winning self-image.
And then finally, what process or tool have you implemented that has had the biggest time-saving impact?
Oh man, AI, it's game changing. We're still in the embryonic phases, but we're teaching it how to do underwriting and we're having a ball with it. It's making us do deal review faster on the residential side. It doesn't connect to the local MLS, but it gives us enough information to go, okay, we need to go look at this property. And it's super fast. We can evaluate literally 10 deals in 10 minutes.
Mm-hmm.
85% accuracy information. It's just unbelievable.
Yeah. And well, I got to take advantage of that because a shameless plug. If you go to realdealcrew.com for those listeners and check out what we do to help people adopt AI and automation in their real estate investing business so they can scale accordingly. I really appreciate your time. This has been fantastic. One last time, it is nngcapitalfund.com. But really appreciate it. This was great, and it was great to meet you.
Great to meet you as well.